right before this, put it on my calendar to do Thursday.
Well, it's about time,
So
guys.
we'll be here next week.
It is Monday. It's 5 o'clock, and next week I've been promised we will have intro audio. We'll see if we can do that. But today, the big thing is 2025. We're a month away. That's crazy. 2025, we're a month away, and we're talking about investments, good investments in 2025. I am Chris Peshek. I'm a real estate broker at Peshek Properties in Dripping Springs, Texas, just outside of Austin. This is my buddy Steve Babcock, and his lighting is glorious. He is a mortgage loan originator with Motto Mortgage. He's in Lago Vista, Texas, which is also just outside of Austin. And we do this little show called After Hours Real Estate. We're going to talk through a couple of articles. Oh, I didn't show you the second thing that we're going to talk about, but it'll be fun. I'm dropping that one on you last minute. But we're going to talk through a couple of real estate articles. Obviously, we're both in the real estate industry, so that's what we talk about. And it is after 5 o'clock on a Monday, and after a long Thanksgiving weekend, we're going to drink some alcoholic beverages, some adult beverages. Mr. Babcock, what are you drinking today?
I am drinking a Miller Lite.
Beautiful, a fine Pilsner. Every time I see it, I got a fine Pilsner. It says so on the can.
It does say it on the can.
Must be. We have very, very good friends from Boulder, Colorado, or just outside of Boulder. And they brought my wife and my favorite beer from a brewery that's right around the corner from them. It is Liquid Mechanics Brewing, and this is the Lucid AF. This is the Lucid IPA, and you know I'm an IPA fan. So
is it just beer in that from Colorado?
It is just beer. It is just beer.
Making sure.
There's nothing non-beer about this.
You know, these days you got to check the label if it says something like Lucid. You know, hold on.
You kind of do.
Talking about here.
Yeah. You kind of do. That is no lie.
Well, cheers, brother.
Cheers.
It's fun. I went on for mortgage news today, so I hadn't heard much. Right?
Nothing.
Thanksgiving. It's been kind of quiet. Rates have been getting better.
Slowly.
Slowly. Yep. Really not much has happened today. I did see that there are some mortgage companies now that are hiring that weren't before.
Yep.
So it almost seems like kind of like that first wind after a winter, where you're like, wait a minute, that feels a little bit like summer.
A little cool. Yeah,
a little warmer. I don't know. It feels different right now. Things have changed.
It does. And I'm going to pop this up. You talked about today's mortgage rate. So 30-year fixed average, guys, this is not a quote or a promise of lending. I'm going to say it for Steve. Average 30-year fixed right now is a little under 7. It had been over 7 right around the election. 15-year fixed 6.1, jumbo about 7, FHA about 6.25, VA about 6.25. So yeah, they're starting to trend down a little bit.
And by the way, the reason I don't talk about rates is because of how regulated I am.
Yeah.
If I start mentioning rates, even in a casual way, I then it triggers certain events that requires me to drop other information. And quite frankly, I'm not offering any kind of loan on this program. We're just taking questions and seeing how we can help. And so it's a lot easier for me to avoid that entirely. And for Chris to go to a webpage that shows us information, so we don't have to worry about any of those events being triggered. So just FYI, I figured I'd throw that out there.
It's funny looking at this graph and looking back 10 years at what the mortgage rates have done. I mean, here's COVID, obviously, and then here is 2022, rocket back up. But anyway, yeah, so mortgages are slowly starting to come back down a little bit. Okay, that's fine. We're good with that. But we're not here to talk about mortgages necessarily. We're here to talk about, should you consider real estate investments in 2025? Now, I'm going to lay the groundwork for this real quick. Man, we've been told over and over and over that the real estate market is in a bust cycle, going to lose a ton of value. I've personally been told that Austin's already dropped 20% of its value in the last 2 years, which is utter horseshit. I'm just letting you know. It has not lost 20% of its value. Look at this guy. Aaron Llewellyn, man. Aaron, have you ever heard of Liquid Mechanics Brewing? Um, Aaron knows a thing or two about brewing beer. But anyway, we've been told all these bad things about real estate. So why in the heck would you consider real estate an investment in 2025? And before we even get into this, Steve, you and I talk a lot offline about this stuff. Is real estate something you would be interested in looking into buying in 2025, or are you like, nope, not yet?
The truth is, I like the comment that Aaron had just now.
Nuclear technology?
Yeah,
Nuclear?
mainly because if we continue on our path with AI and the demand that it causes from the grid, and quite frankly, especially with cryptocurrencies, there have been some very positive for crypto comments from the new administration coming in.
Yep.
And so, right, I don't know if they're rumors or confirmed. I honestly, I haven't paid that much attention, but the headlines I've been seeing have been friendly for that. Well, that would mean that more power will be needed on a massive scale, even more so than we had already predicted. So that seems like a safe investment. Now, real quick, sorry, I know you want to say one thing, but to answer your question though, is real estate a good investment? I think every first-time home buyer should be buying a duplex or a quadplex, every single one of them. So do I think it's a good I always think it's a good investment, but for your long-term holdings, I don't think you'd ever want to, buy a home for a year and then sell. That is typically going to be a losing proposition. There are plenty of examples where it's not, but for the most part, homes are not supposed to be short-term investments.
Correct, without a doubt. And I'll tell you this. You've got to remind me this next week. But let's next Monday. Let's get friend of mine, former student of mine, Ryan Walker. Let's get him on here, and let's talk about energy, because what you're saying, Ryan and I have been talking about for probably the last 3 months, specifically driven by crypto and AI and data banks, or whatever they're called, the big processing facilities for data. Let's talk about that next week, because that's interesting. And the data centers, thank you.
Yeah.
And there's a lot of stuff that's happening around that right now, including the small nuclear and all of that stuff. So help me remember. Let's talk about that next week. All right, investing.com. Now, this is an investing channel, and you can tell over here, like, they've got all the different, what's the word I'm looking for? The indices, NASDAQ, S&P 500, Dow Jones. So this is from an investing channel. This is not the National Association of Realtors talking about this. I would hold those in two very separate regards with investment advice. But investing.com, real estate markets are regaining momentum as favorable macroeconomic conditions and recent data suggest compelling opportunities for investors, according to analysts. Falling treasury yields this week signaled growing investor confidence in the Federal Reserve's potential to continue cutting interest rates. This optimism is reflected in the housing market, where pending home sales rose for the third consecutive month in October. Contract signings increased 2% from the previous month and 6.6% year over year, according to National Association of Realtors. Now, I left that site. I wanted to remind people, last year at this point in time, interest rates were roughly the same, maybe a little bit higher. That's July, August, September. Oh, they were higher. Okay. But we had, like, last year, not much was happening in the real estate market. Anecdotally, I've seen a lot more buyer interest. I've gotten a lot more buyer leads in the last 3 weeks. I don't know. Does that have anything to do with rates being down or some other stuff that we've talked about before? I don't know. Steady recovery in the U.S. housing market could mark the beginning of a global revival in the real estate investment. Declining capital costs, improved debt availability, and significant private capital ready for deployment are driving this trend, UBS, or analysts at UBS said. I need more beer. Supply constraints boost prospects. This is very interesting, and you and I have been talking about this. Supply constraints. Thought everybody was saying that we've got this oversupply right now. Both commercial and residential construction remain constrained by stricter regulations and higher costs since the pandemic, creating a scarcity of high. What's that?
Keyword there was construction.
Yeah, yes, construction, residential construction, creating a scarcity of high quality properties. That's the other thing. We've got, even if you look at commercial, there's a lot of B and C and even D class stuff. Not a ton of new stuff, especially
what you're
in
really
outlying
saying
areas.
for the layman is, yeah, there's a lot of deals right now. At least it seems that there are going to be a lot of deals right now in a very hurting commercial economy.
Yep.
In other words, like big commercial buildings downtown. But the cost of revamping them into a residential building currently may exceed just building a new residential building.
Yeah,
It's,
probably cheaper, and you would end up with a better end product. As interest rate cycles shift, supply shortages combined with strong demand are expected to lower vacancy rates and fuel rental growth. We've been talking about that the last month, potentially leading to significant capital appreciation. Okay. One thing that's sticking out here, does it almost seem like they're predicting interest rates to continue to go down?
Again, I get that there's a general shift in sentiment.
Yep.
I think it feels like people are holding their breath. I don't know. It's a weird feeling. It's just a very strange feeling, but it does feel as though the emotional winds have shifted.
Yep. And I think that's what they're pointing out here. UBS highlights logistics properties, data centers, telecommunication towers as standout segments within commercial real estate. Again, join us next week. We'll talk specifically about data centers, particularly in the US and Europe, driven by e-commerce and artificial intelligence trends. You just said it a while ago, AI. In residential real estate, multifamily housing, senior living, and student housing are identified as promising growth areas. Okay. I keep hearing that multifamily were overproduced in Austin.
Where are they?
I don't know.
I haven't been able to find them. Here I am touting duplexes and quadplexes and triplexes over and over again, but I think I've maybe financed one in my whole life, or maybe two.
Yeah,
like
it's hard to find duplexes, tris, and quads.
Yeah. I would almost go out of my way to buy one if I were starting off. To put the money down on go to a bank. You get the land, the builder. Man, it's not as tough as people think it is. It is tough, but it's not as tough as you think it is.
Yeah. In private markets, core and core plus real estate managers are well positioned to generate income while capitalizing on opportunistic acquisitions. I love that term, opportunistic acquisitions. In other words, people are losing their ass and they got to get rid of their property, and you go bail them out. Direct real estate investments in Canada, the U.S., and continental Europe are forecasted to be especially lucrative, driven by robust rental growth and falling interest rates moving forward. I'm liking getting a different perspective, getting an investment perspective rather than a real estate or a general news perspective.
Sure.
Despite these positive signs, UBS urges caution in the UK residential market where affordability challenges persist. Same in Canada. There's a ton of affordability issues in Canada. Similarly, mainland China remains a risky prospect despite recent stimulus measures aimed at stabilizing the sector. Okay. Again, you and I, we talked about China a lot about a year ago, didn't we?
Yeah. Oh, you're about to hear a lot more about them. That's for sure.
Yep. While UBS anticipates a broader real estate recovery in 2025, they emphasize the importance of careful evaluation. Investors should consider sector fundamentals and regional dynamics to navigate opportunities effectively. For those prepared to manage regional and sector-specific risks, the current environment offers a promising entry point into the recovering real estate market. When I was reading this earlier today, man, I'm reading this going, and I just said it, it's a perspective you're not getting elsewhere, because they're talking specifically about, look, you're not going to come into Austin and buy multifamily. Go find an area that it's undervalued and go buy there, because again, we'll get to it next week, but hint, hint, go find some locations where data centers are being built. And I'm not going to give away the secret recipe yet, but it's real easy to find out where data centers are being built. There's a very important resource where they're building these things. So, Yeah, exactly. Exactly.
That makes a lot of sense.
Yep, it does. It does. Oh, so that's, I mean, that's really the article, the end of the article. What just overall thoughts on that? Like, what are, because I've been talking about how much I like the article. What are you thinking here?
You and I are going to be talking about data centers after this. So look, it's just the old joke you and I keep talking about on the show. The best time to buy was 2 years ago,
2 years
right?
ago.
Like it's one of my favorite sayings because it's so damn true. Everyone talks about how they want to get into real estate, and then tons of people are like, this is not the right time. The prices of the homes are too high, or they're too low, or the rates are too high or too low. It doesn't matter what it is, when it is. There's always a problem, right? But the reality is, there's always something out there. Always.
There is. It may, and man, that's kind of the it goes into not even necessarily just residential purchases, but you think about it from the perspective of go back to, is Austin affordable? Yes, Austin's very affordable.
Yeah.
Austin's an extremely affordable town when you put it into context with the rest of the continental U.S. and the amenities that are in Austin versus other areas.
But hold on, didn't I just literally see the other day on one of those internet ads or whatnot about Lennar Homes for in the high hundreds?
Ooh, I don't know about that in the Austin area.
Well, it said it was in the Austin outskirts. So
It's
how you
probably
define
in
Austin
Gerald.
is going to be probably generous, but
I bet it's
um,
Gerald or maybe Lockhart, but I
seemed
bet
like
it's
it was
Gerald.
south.
Oh, south?
I could be wrong.
If it was south, it was more than likely Lockhart. Could be San Marcos.
Okay.
Yeah.
But I mean, well,
you're going to be an hour to downtown, but that's the point I was getting at, is you're not going to come into downtown Austin and find a house to flip and make 60% on your money. That's not happening. But
no, that boat
you,
sailed. It might happen if the rates drop again, but that would be bad for everyone.
yeah, it would. If they drop that much, it would be terrible.
Yeah, everyone's sitting around waiting for the rates to get better, but the reality is we don't really want them to get much better.
No, and you and I've talked about that before too. 5.5 to 6.5%.
Yeah, 5. I think 5 is really ideal.
Yeah.
At least for solid growth. But you get down to that 2.5, 3%, 3.5% range. And money becomes so cheap that so many people jump in that it drives the price for everything up.
Yep.
And man, when there's not a lot of new items coming in. If we had been building tons of new homes, it wouldn't have been a big deal. But we couldn't keep up.
Yeah, exactly. And I mean, there's new homes, but again, they're on the periphery. Drive till you qualify. Same thing if you're looking at investments. Go find your investments where the investments exist. Don't try to force something to work because you like the area. Go find it where they exist.
What we should do next week is that 3D printed community here in what was it, Round Rock?
Yeah, it's up kind of between Georgetown and somewhere.
Chris and I were gonna go visit this place like 2 years ago, and I'm not joking. Like the day before we were gonna go, they burned down in a house. Like they had some sort of fire.
It was their office.
Yeah, their office is burned down, and we were like, well, maybe now is not the best time for us to go randomly drop by and visit them. Yeah. And so we decided not to go, but I've never been actually now that we have.
I haven't been into the community. I've seen the houses.
And we should go have lunch there or something. So yeah, man, long story short is I read the other day that they have completed a phenomenal number of homes.
Yeah, there's a bunch of them up there. And people have bought the hell out of them.
I would love to know how much faster, or if they're building them faster than typically built homes.
Here's the thing though. You and I both talked about 3D printed home as to being a cheaper alternative, but they're building them cheaper and they're selling them for the same price. All they did was create margin. They created artificial margin. I'm saying, like, it's true. If you look on the MLS, there's some listed on the MLS. They're being sold the same price as everything around them, which that's fine. I mean, yeah, I'm all about that. As a home builder, you found out a way to make a product cheaper, but make it nice enough that you can sell it for the same price. Good for you. Good job.
It's even more valuable because it can withstand storms that a typical home wouldn't be
Yep.
able to
Go
withstand.
try to burn down a 3D printed concrete house. I bet your
Yeah,
insurance is
concrete.
cheaper too.
Popular demand states otherwise, but concrete can be lit on fire. It just takes extremely high temperatures.
Well,
Yeah.
fair. Yeah. Okay. I mean, look, it's
However,
not going to
I think
withstand a
temperature
nuclear
right.
blast.
Yeah, I mean, but you wouldn't want to put, I mean, never mind. You're right. Typically, you'd be fine. You'd be fine though. But yeah,
Okay.
man, I
Now,
think we should talk about that next.
let's talk. Now, I'm going to shift gears a little bit, and this is the one that I'm going to drop on you, but it's not drop. It's just a market update kind of thing. I just want to talk about where we are in the market compared to the last 5 or 6 years. And these are just slides. This comes from Independence Title, one of the title companies here in Austin. Interesting stuff. So this is 2018 through 2024, so 9 years. That's a lot of data in here. Total residential sales. Okay, we're down. We know that we haven't been selling a lot of houses. So we're down around 2022, 2023 levels, which if you go back pre-pandemic is equal to like 2018, 2017 was lower as well. So those are the levels that we're at just for sheer numbers, right?
2017 was low?
Yeah, from sheer numbers, because there weren't as many houses to be sold back then. It was just a normal market. So now it was continuing to grow, but 2020 blew everything out of the water. So average sales price. This is COVID. Okay, got that. We're still. I did the numbers a while ago. We're $100,000 over where you were pre-COVID. 125,000, 150,000 over where we were pre-COVID. This is what Steve was talking about. When you buy a house, when you buy an investment property, it's a long-range proposition. Because look, oh my God, if you bought in 2021 or early 2022, especially when the market was here, you lost all this value. Well, that's fine. It's flattened out. It's starting to creep up again. It's a long-range investment, long-term investment. And if you've been in your house since the 20-teens, you're fine. You've made a lot of money.
If you look at all of these graphs, they're genuinely going up. There's a few that go down, but
they're
like that article we read, that if you look at how many years back, like 7 of the past 50 years or something like that, it's been good years except for the 7 years, right?
That's it. Median sales price, again, 2022 peaked, but look at this year. Where's the 20% drop? 550 to 450. That's okay. Maybe is that 20% from the peak? Is that what they're looking at?
Oh, well, they always say from the peak. Yeah, they always say from the peak. So but they don't define when the peak is.
Right. But I mean, if you bought at the end of 2022, you've dropped 5%. I mean, I guess technically from the peak to now, is a 20% drop-ish. But
I love these graphs.
You're also way the hell above where you were pre-COVID, pre-pandemic.
And you really wanted to move in January. You really wanted to move in January of 2021, didn't you?
Potentially. No, I wanted to move in January of 2018.
I guess it'd be a lot faster rise up if you went to 2021.
That's right. Sales volume. So total volume, like number of houses times the sales price. We're still middle of the pack. We're above 4 of the 7 years. So again, still doing very well from a volume standpoint. That data really, this number really doesn't mean anything. I mean, it doesn't matter, that one. Months of inventory. We are high on inventory. We've talked about that over and over. We're between 4 and 5 months of inventory. Historically, this is still a seller's market. I can tell you right now, it is not a seller's market. Buyers are being very picky. They're being, ultra picky. They're getting whatever the hell they want at this point, except for price drops, because sellers are like, if you don't like it at this price, move along, go, get on.
Sellers are great rates.
What's that?
Because most of them have great rates.
That's right. They've been in their houses for long enough. They've got great rates. They may have refied, during that 2%, 3% range, or they bought them a long time, or they bought them right during that range. So yeah, they don't.
Most of them have the stomach.
What's that?
most of them have to stomach the fact that when they move, they'll have a higher payment wherever they're
That's
going.
right.
So
Yeah,
it
that's
makes
right. So they're like, do I
negotiations.
really want to move? I've got 3% here. If I drop my
Yeah,
price $100,000, then I have less to put down on my next house and I'm going to pay 7% interest on it. Why would I move? Give
right.
me what I want or I'll stay put.
Yeah,
I
you're
mean,
gonna
that's
have to have some.
literally what's happening.
Yeah.
Yep. Yep. And that's the end of the data on that. But I just thought it's interesting, kind of December. Let's go ahead and look at where we are. So overall, everything's kind of middle of the road with the exception of inventory. But price drops aren't. I mean, we've got more price drops
So
overall.
it, it's curious to me. You have this pent up demand. At least you've had this pent up demand of people that want to move. Let's say during the pandemic you bought the house, and then, you as a couple, you get pregnant, you get another kid, and you make that work, and now you're pregnant again, you have another kid, and you're like, man, we need more space.
Right.
Okay, well, that's been a year ago now, and you've really needed more space for a year, but every time you look at buying a new home, you're like, well, we got to sell the house for, God, less than it was worth last year and the year before.
Yep.
And then we're going to go buy a new home. And God, to get the more space, we're going to have to either move to Gerald or to wherever it was you were talking about. Right. And then, and you start looking at the alternatives. I think once the rate gets into a palatable range, again, like we mentioned earlier, roughly 5% ish,
Yeah.
that'll let those people go. And those people will flood the market. That's my prediction. And,
Yeah, I
and
think so.
and so that'll have to correct itself, right? The pent up demand, the buyer demand, right, will have to work itself out. On the flip side, those people all have to buy houses, so once they sell them, there'll be more homes to choose from. I
That's
don't
right.
think it'll be all that bad, but I do think there might be a drop in value when that happens, but we'll see.
Yeah, I think you're right. I mean, I don't know if there's going to be a drop in value.
Depends on the rates, to be honest.
Yeah, it depends on the rates. If the rates continue to come down through Christmas, I mean, here's the thing. I'm going to go back to which
But,
chart was it?
let me
Oh,
let me throw out a realistic scenario to you.
okay.
um, Trump gets into office and starts whacking away at the government, and people start losing their jobs left and right. He's
Yeah,
simultaneously exporting people, or however you want to say it, deporting people, and people are losing their jobs left and right. Businesses are failing, going out of good, just literally, boss isn't showing up the next day, kind of stuff.
right.
And now you want to buy a house, right? Okay, so you go to buy a house, and inflation has also continued to hurt you, especially now that
Escalator.
places can't afford to hire enough workers, and we've got shortages in areas, and so now the prices have to go up to reflect that, and now your home's going to go up as well because everything goes up in tandem. So
Yep.
now your home goes up in value. Let's just say in 3 years we've doubled the value of everything. So your home that was 500 is now worth $1 million, and now you want to buy a home that's worth $1.5 million, but you're paying on your $300,000 loan
Yeah.
at 3%. But now you want to buy a $1.5 million home, right? Granted, you're gonna be able to pay off, let's just say 800 of that,
Yeah.
right?
Half of it.
You
Yeah.
sell, sure, and then but hey man, you still got another 700 million
Got
left, right?
100,000 at 6%.
Right. So your payment's about to not only double because of the loan amount, but
Yep.
in this scenario, but the rates are still higher. So the idea of staying where you are and you're now $1 million home at a payment that was pre-COVID, we're going to be calling it, I'm sure.
Yeah.
PC. It was, um, I it's going to take a lot for people to move. I think you're going to have a generation of people that didn't know it at the time, but had their forever homes that they'll never get rid of.
Never. Yeah. Yeah. I don't doubt that. The other thing that's going to be compounded with that is those people are going to stay put, and people that want to buy houses are going to be forced into higher and higher priced houses. Are they actually going to be able to buy them at that point? Because if the first time home buyer house at that point is $700,000, but those people aren't moving and moving up, where's your first time home
Well, if
buyer house?
no one can buy homes, what are they going to have to do to live?
Rent.
Right. And why is it so beautiful to buy a duplex, triplex, quadplex?
because you can claim that income as your income and live in the other part of it. You don't have to, I mean, even at that point, yeah, at that point, if a duplex is $1.5 million, well, buy it.
You have
Put
more
renters
income than you think you do because you can rent out unit B, C, and D. Not every time. There's
in.
there's stipulations, there's
Right.
restrictions, there's regulations, there's things that we have to talk about before you take what I've said and run with it. But call me, we'll talk more about it. But when it comes to buying those kinds of properties as your primary residence, uh, it, the rules are set up in your favor. Most
That's
people
right.
don't know about it, but that would be the best way to start typically from
Yeah.
a financial perspective. You're 20 years old, you buy a quadplex and you rent out the other 3 units and you live in unit A. And after a few years, maybe even just a year, but after a few years, you move on with your life. And now you're collecting 4 rents that other people are paying off some mortgage that you have. The beauty with the quadplex is you can't actually do it unless it's going to make you money. Or at least you can't finance
Yeah,
it.
they won't allow you to. Your financing won't work.
Right. And if you want to know more about that,
Yeah.
define making money. Okay. I mean, come on. Is $1 a month making money? You know what I mean? So I would say no, depending
Depends
on
on what your goal is. I mean, if you're looking at appreciation, maybe.
details, right? But yeah, again, so that I stay out of trouble regulation wise, call me for the details on this.
That's
But
right. That's
there's
right.
a lot of options when it comes to multifamily homes.
Yep. Yep. And I will leave you with the last number I saw. The last prediction that I saw was they expect home prices to go up an average of 3.5% next year, which is right on par with average. So I don't know. There you go. Should you look into real estate as an investment in 2025? I'm asking you.
It's too big of a question. I'm sorry, because I don't seriously,
It's not.
if what we've been told actually happens,
Yep.
right? In terms of the new administration, then I can't honestly imagine. And there are lots of very, very well paid people that are paid to imagine, right? And they're sitting around trying to figure out what it's going to look like.
Yep.
I'm having real trouble coming to a conclusion. I can't see it. I don't know what it's going to look like. In my worst case, terrible fear. I always go worst case scenario first and then work my way backwards to the best case. I don't know what that is. I don't know if I
You're
took a personality test and said it's just normal, but for me. But anyways, in my worst possible fears, I still don't know what would happen to home prices.
Yeah, but I'm going to bring back one of your favorite sayings. When was the best time to buy a house?
Before everything happened 2 years ago. Yeah.
We'll see you next Monday, guys.